What's up, everybody? Welcome to another edition of the Free Toaster News Pod. I'm your host, Carlos Caro. I'm here with co-host Nick Madrid. So we're going to jump right into this week's story. Oportun announced a new lending partnership with partner bank Column NA. On the surface, looks like a routine partner bank press release. Didn't look that exciting initially, but when we dug into the filings, there's a backstory here. For the past 9 months, Oportun had a bank partner that wouldn't hold a single one of its new loans. So the theme today is your bank partnership, not always your media, can be the cap on your growth. Oportun's marketing machine was humming. We're going to share some of the metrics here in a second. And then they hit a wall, had nothing to do with marketing or media. So the Phantom partnership, their deal with Pathward, and now the deal with Column is what's unlocking growth for them in channels like affiliate marketing, direct mail. But there's a bank charter question at the end. We're going to explore more specifically why they chose this partner bank route versus a broader wave we're seeing with fintechs getting their own charters. But Nick, before we get into the details, I think we have a word from one of our sponsors.
Cool. Thanks, Carlos. Yeah, this week's episode is sponsored by our friends at Fintel Connect. If you need an affiliate marketing platform built for financial brands, go chat with Fintel Connect. And they've got an interesting webinar coming up next week, which we'll join. You should know about cross-border conversions winning in the Canada credit card market. You know, what's interesting is that Canada's a high potential acquisition market, but the US playbook just doesn't work there. Learn more. Sign up link will be in this week's news edition that we published yesterday. Link in show notes. Okay, so this is so interesting. Let's set the table a bit more about why this arrangement between Oportun and Column is so interesting to a marketer. Under a September 2025 amendment to their agreement, Pathward, Oportun's bank partner at the point since 2021, they stopped retaining Oportun loans. So starting in August 1st of 2025, Oportun bought back 100% of everything Pathward originated. Then it bought Pathward's existing book too at $115 million on October 3rd, with the remainder being acquired this past February. All of that is from the 10K. It's all public. Anyone can see. So for 9 months, Oportun was effectively running a charter from a bank partner who wouldn't hold a single loan.
Yeah, that's really interesting. It goes without saying, I think, that none of this was mentioned in the press release, right? We saw the press release. We said, hey, new partner bank. And then we got to work trying to get to the backstory of what was going on here. So, I mean, look, it sounds like Pathward, who is the kind of the legacy partner bank, said they're not going to hold any new loans. And it looks like it's starting to show up in the numbers. And I think there's a part here that marketers need to internalize.
It does. Originations fell 11% year over year in the first quarter under what the company called a tight credit posture. In full year 2026, origination guidance sits at just mid-single digit growth. Maybe you can share a little more context of what you're seeing relative to the companies you're working with. But meanwhile, and this is the tension of the whole story, the acquisition engine was seemingly working for them, right? So like referral-driven originations grew 352% year over year to 35 million in Q1 of last year. They launched instant pre-screen in Q1 of this year. For all intents and purposes, it seems like the machine was ready to run. It just had nowhere to go.
Yeah, no, I've seen this before. So I work with a lot of lenders in what I would call the fintech category. So companies that don't have their own charters, they tend to work with partner banks. And this is something I hear a lot. I actually spoke with a client this week that needs to do a little pulling back in some of their channels. So they have the demand from the consumer. They just don't have anywhere to put the demand because of their funding capacity with their partner banks, with the capital market deals, etc. So this is quite common in the fintech world. And it tells marketers, like, you can hit on every CAC target, you can build every channel the right way, and you can still get constrained by stuff that has nothing to do with marketing. So another way to say this is, like, fintech marketer constraints can live in the CFO's office rather than the CMO's.
And so that's the backdrop of this week's announcement. Column NA is a nationally chartered bank built by Plaid co-founder William Hockey. He acquired and rechartered Northern California National Bank, and it banks names like Brex and Built and Wise. And under the agreement, which went effective June 30th per their 8K, Column will originate Oportun's unsecured personal loans. And I think that's important because we separate unsecured and secured as we were doing our research. So Column will originate Oportun's unsecured personal loans and put its own balance sheet to work through debt financing and loan purchases. The initial term is for 4 years, renewing automatically for successive 1-year periods.
Yeah. No, so it's initially reads like a funding story, but I think this is a growth story. I think this is a good story for Oportun. So the partnership with Column, based on our research, they're going to be holding and funding loans. And that's the thing that Pathward stopped doing. And again, this is for the unsecured book. We'll talk about the secured book in a second. But there's an interesting wrinkle here because now Oportun has 2 bank partnerships running simultaneously.
Right. And so you can look at Oportun's state licensing page. We linked out to it in the news edition. It now tells consumers in 32 states that their loan, quote, may be originating by Pathward or Column. 7 states remain Pathward only, Georgia, Illinois, New Hampshire, New Jersey, Pennsylvania, Rhode Island, and South Dakota. And New Mexico and Wisconsin stay on Oportun's own licenses. And I think the AK fine print matters too. The Column agreement includes, quote, certain exclusivity provisions with respect to specified loan products and certain future financial products, subject to existing bank partner rights and other exceptions. All that means is it looks like a direct carve out for Pathward.
So there's a product here to watch, the secured personal loan. This is their personal loan that's backed by an auto title. I think you can make the case that it's Oportun's best performing asset class. Nick, can you hit those secured personal loan numbers for a second? I think those surprised me.
Yeah, it was super interesting. So secured personal loans grew 30% year over year in Q1 with substantially lower losses than unsecured. We had to dig a little deeper, but in a 2024 deck, I think it helps put it in context where it's roughly 500 basis points lower losses and about 75% higher revenue per loan. And again, that was from Q4 24, but if we extrapolate, I think we can imply that those economics will stay the same or similar. But the Column agreement covers unsecured loans only. Secured private loans or SPL is live in just 8 states. So Arizona, California, Florida, Illinois, Nevada, New Jersey, Texas, and Utah. And its expansion path to roughly 33 more states runs contractually through Pathward. So whether SPL's national expansion goes through Column, Pathward, or nobody is an open question to us. And the timeline is also unknown.
Yeah, no, Nick, it's interesting as you talk through those the secured personal loan numbers, and now I'm speculating here, but if I'm Pathward and I see this divergence in asset class, I see the secured personal loan performing this way that I really like, lower risk, higher revenue, it has a certain composition, and then the unsecured book, maybe on a relative basis, looks less exciting relative to the secured. Maybe that's part of the reason this bank partnership ended up struggling, and why Column now came in to take in the unsecured. I'm just guessing here, but I think it's just notable how different those 2 assets were performing. But let's pivot. So the story here is, I think, why does this matter for folks in acquisition? So Oportun's CAC, so they had been making good progress here. So we're going to read what we saw from their filings. So $117 for full year 2025. That was down from $125 the year before that. And then we saw a quarterly low of $103 in Q3 2025. So Nick, can you say a little bit more about what we learned regarding why their CACs have been dropping?
Yeah, so this is one of my favorite parts of the story. At IPO, which was September 2019, Oportun's moat was physical, right? They had 335 plus retail locations across 12 states, open 7 days a week with bilingual telesales operations. Today, it's around 126 stores plus about 460 lending as a service partner locations. And the national reach exists only because a bank partner provides it. The 10K says it plainly. It's the Pathward partnership that made Oportun nationwide. And because retail and telesales sit inside Oportun's reported CAC, those store closures are a big reason why we think CAC fell from around the 190s in the early 2023 to 103 in late 2025. So, and the irony though is that Pathward is both partner that made Oportun national and the partner who retreated created this funding squeeze. So the market machine got cheap at the exact moment the bank partner stopped funding it.
Yeah, no, I mean, and it seems like just looking at those numbers that they're offline channels, the retail stores, those likely had higher CAC because I assume you're paying bounties to sales reps, things of that nature. Versus in a digital context, you wouldn't have those types of costs. So it seems like the COVID era forced a retrenchment in that channel, and it looks like like based on this data that they haven't really come back in the retail channel. So that's interesting. But back to the column partnership. So I'm seeing this is going to unlock a few things for Oportun. So one is I talk a lot to these marketplaces. So the Credit Karmas of the world, the Experians of the world, the Nerd Wallets of the world. And I can tell you from firsthand experience talking to the larger marketplaces, they're quite cautious when it comes to onboarding players that don't have a full national footprint. In fact, it'll be one of the questions they'll ask you very early in their assessment is, okay, new lender, what's your state coverage? And they'll actually ask you, go state by state, tell me exactly where you land and where you don't. Because the value proposition for them is much, much stronger if you can be national. So this tells me Oportun, assuming they retrenched in affiliates, now have a much stronger story to kind of come back into those channels. And then same thing holds in channels like direct mail in particular, but you look at digital targeting, you look at other channels. It's the same amount of work to mail 8 states as it is 50 states. It's the same response models that you have to build, targeting logic, creative. It's really the same thing. And if you have to go through all that work for just a share of the upside, that starts to put a constraint on the possible business. So bottom line here, I think this new deal with Column is unequivocally a good thing for Oportun's growth.
Yeah, and I agree. And there's a bigger strategic question sitting underneath all of this, though. Last week we covered the parade of fintechs that were filing their own bank charters, or there's one that actually acquired their bank charter. But things like Klarna, Affirm, Upstart, Oportun might have been too early to that party because it applied to the OCC for a de novo charter bank back in November 2020, seeking its own words to offer additional products and services, provide us with new sources of lower cost of funding, and give our business regulatory clarity. It actually withdrew that application in October of 2021. It stated it planned to refile. It never did, or at least not yet. So
yeah, and another thing just to add to the story, as we were looking at the timeline, we need to remember the Digit acquisition. So this went back to December 2021. 3 days shy of the 2 months after withdrawing the charter application, Oportun spent roughly $205 million buying Digit, digital banking and savings platform, essentially trying to buy the deposit and daily banking capabilities a charter would have provided. And then 9 months later, $108.5 million goodwill impairment, more than half the deal value. What survived was the set and save product. So a frame of what happened here is they attempted to, or they did file for a bank charter, pulled it back, later acquired Digit, wrote off half of it 9 months later, and now very recently are signing with a better partner bank. So Column is that last part of that story.
yeah, and I think the interesting open question here is why they never refiled. This newsletter raises it carefully, and we should too. Where like Oportun's business has historically focused on thin file, credit invisible consumers with a focus on underserved Hispanic audiences. And its products are carries APRs north of 36% before it adopted the cap in 2020. Those are real life considerations that could influence how a regulator views a charter application, and none of them are easy to talk about. So I think the question still stands: is Oportun seeing a strategic advantage in the bank partner model while others race to charters, or were there more structural reasons that took that option, off the table? Maybe we'll find out. I don't know. We don't know. We're just kind of just exploring and thinking about it. If anyone has a point of view of that, we would love to learn more. We'd love to talk to you either on the pod or privately with Carlos and me. Just reply, and we want to hear from you.
Yeah, no, I +1 on that, Nick. I tend to think these bank charters, or at least what I have heard in the past and in that era, in that 2020, that COVID era, is the regulators were kind of squeamish when it came to subprime, thin file, credit invisible, all these audiences that Oportun has historically played in. At the time, it was very hard to get a charter. That's why you didn't see the Mission Lanes of the world and other fintechs filing for bank charters and getting them back then. Clearly things have changed, but there are still, I think, maybe perceptions and legacies from the past that could influence these things. So what to watch here? I think the Q2 earnings, their next report, we'll be watching if they raise the fiscal year 26 originations guidance. They haven't done that yet. But if they do, that's going to tell us that Column's funding capacity is giving the marketing team now the green light to move faster. If these types of conversations around bank partners and capital markets and growth, these types of discussions appeal to you, we're going to be having a lot of these types of conversations at our upcoming event in San Francisco. It'll be on September 23rd. We're calling it the Affiliate Marketing Summit for Lenders. It's for publishers and lenders alike. We're seeing signups coming in now every week. Day 2 is going to be out in Sonoma, and that one's almost sold out. I think there's less than 10 tickets left. And we couldn't have made this possible without our sponsors. So thank you very much to Experian, Engine by Gen, and Prism Data for making this day possible. If you want to learn more about the event, you can check it out at events.thefreetoaster.com. We'll link to it in the show notes.
Yeah, and if you want the full Oportun breakdown that we discussed, it's in our news edition with all the filings and state maps and some CAC numbers at thefreetoaster.com. A quick housekeeping if you're there. The last few weeks, we've been trying this single story deep format instead of a longer list of news stories, partly because it's been a pretty slow news cycle for the last few weeks. If it's July or summer, I don't know. It makes sense though. So if you like it or don't like it, let us know. Candidly, I think it's kind of fun to take a single story and unpack and go deep and find somewhere the bones are buried, find some interesting tidbits that we otherwise don't know. But if it's not useful to you all, the listeners, the readers, then we're not going to do it. So we need to know. We need some kind of feedback. So please let us know.
Cool. Well, I think this is a wrap for the pod, Nick. So thanks for listening, everybody. We'll catch you next week.